Welcome everybody back to the Financial Advisors Workshop. I'm Brian Kasal, your host. This is the 4-Star Financial Network. We are on a quest to interview and discuss the industry with some of our best colleagues in the financial advisory industry. And we have a great gentleman to talk with today in the great state of Michigan, with the city of Detroit recovering, and Michigan is obviously the great state of Michigan. Bob Stone. And Bob Stone is a partner and relationship manager with Telemus out of Southfield, Michigan. And Bob, welcome to our adventure today, the Financial Advisors Workshop.
Thanks for having me. Glad to be here.
Excellent. Well, good. Well, Bob, you told me a little bit about your firm, and I want to share some of those thoughts with the group. But before we talk about Telemus, how did you get started in the business? And then how did you get yourself to where you are now?
Yeah, that's a great question. So 2 years out of college, I was working for a mortgage banking company in Dallas, Texas, after graduating from the University of Michigan. And my brother-in-law had been, he was the youngest $1 million producer at Merrill Lynch. This is back in '86. And his thought process was, if I'm going to grow my business, I need to leverage myself, and I want to do it with someone I know and trust. He called me up and asked me if I'd be interested. At the time, I was applying to business school to get my MBA, pulled back all my applications, tendered my resignation, and moved back to Detroit. And the market was just starting to get hot back then. Oh my God, this is great. This is going to be wonderful. And I started working for him back in March of 1987, and been doing it ever since.
Well, nice. Excellent. Then you started with one of the warehouses at the time.
Yes, I did. Merrill Lynch, Mother Merrill, and left in 1999 to go to Paine Webber. Paine Webber became UBS, and in our view, became Merrill Lynch all over again. And after 6 years at UBS, we decided to start our own BDRIA and started Telemus Capital long before I think anyone knew what a BD or an RIA was.
Yeah. So tell us about those days. What was challenging about it?
Everything. Technology was horrible. Custodians were bad. Clients thought you were going to go out of business, and they thought if you went out of business, they would lose their money because that's the way Merrill Lynch and UBS sold against us. Said we were making risky investments, anything and everything. But our loyal clients, understood the safety of their investments, and that we were doing this actually, for them, because we always felt there was a conflict of interest. What was right for Merrill, what was right for UBS wasn't always what was right for our clients. So we decided to do what was right for them, and it ended up being what was right for us.
So what were those conflicts then? And let's talk about whether they're still there now at those firms that caused you to form Telemus.
I think the biggest conflict is in terms of access to money managers, and I would say size too. We had a chief investment officer years back who had been at a large mutual fund company, and he used to tell the story about how Paine Webber, UBS, came to him and said, "You've got a great small cap fund. We'd like to put you on our platform, and for the honor of being on that platform, you're going to share half your revenue with us." So it's kind of pay to play. And I'm a big proponent of having alternative investments in clients' portfolios. And if Telemus Capital comes to a hedge fund or a real estate fund, we're not going to move the needle investing $4 or $5 million with them. When UBS comes to you, they're gonna you got 16,000 advisors selling your product. There's $1 billion+ coming to you. I'm not so sure that's the best thing for a money manager, a hedge fund, a real estate fund to get $1 billion up front and have to digest it. And I'm not so, to me, those are kind of the conflicts of interest. And I also thought the products and services outside of the investment that we had no control over were always, we were walking on landmines, and the insurance side, things always got screwed up. The mortgage side, we lost clients when we referred them to Merrill Lynch's mortgage division. They'd forget to send payment notices out, then they'd send out threatening notices that we're going to foreclose on your house. And these are, multi-million-dollar, net worth clients. We ended up losing business because of the poor development of the underlying businesses. So we decided it made sense to have more control over all those things for our clients. And now in today's day, technology, I think the fintech firms are much nimbler than what you could get at the Merrill Lynch's and the UBS of the world. I think the technology that we have access to and the ability to move in and out of that technology as quickly as possible is I think, a definite benefit to us and to other RIAs of our size.
Well, very much so. So you identified some conflicts, and we've all talked about some of those conflicts over the years. So then has anything, fast forward to now, you started, Telemus exactly what year?
2005, February 15th of 2005.
So we're 16, 17 years on.
Mm-hmm.
Have you seen anything change with wirehouses? Have you heard of any?
Oh,
yeah?
no,
okay.
They haven't. They haven't changed. I mean, there was an article today. I just saw that Merrill Lynch just got fined $15 million because their advisors were selling C shares to their clients when they should have been selling A shares. And that tells me that conflict still exists to this day.
Yes. Yeah, it's interesting, isn't it? But in a sense, though, the public has figured it out because our independent space is growing and their space is not growing.
Exactly. Yeah.
So
yeah.
While they haven't figured out how to solve it, the public's figured it out.
Yeah.
Well, good. Well, you did the right thing. So now, years later, you're with Telemus, and Telemus has grown nicely. So tell us, when you first started Telemus, and the systems are difficult, and everything was a bit challenging. But what did you design at that time, and how has that evolved into a set of services and programs for clients?
And at the very beginning, we were, still money managers, showing our clients good ideas, access to mutual funds. InvestNet was just getting started way back when, so we got access to money managers. We built out portfolios for our clients, and we still have model portfolios that we recommend to our advisors, but give them some leeway in terms of how to, customize them for the client's needs. We're still there, but, the needs of our clients have changed over the years, where money management, yes, is still important, but financial planning, insurance advisory, tax planning, all those things are becoming more and more important as wealth has increased. Generations are coming into those families and moving the assets into next generations. And how do you anticipate those needs and those costs? So we really had to expand kind of the offering to our clients to make sure we're still relevant to their needs.
Nice. So what kinds of systems does that include? Like, how do you deliver that today?
So, listen, FinTech has done a wonderful job. On the back end, we're using Salesforce for financial advisors, and Orion advisors for our our CRM and billing, performance analysis, and trading. So that makes life a hell of a lot easier. You used to have to rebalance accounts using spreadsheets and kind of hook or crook to get the rebalancing done. Now we can plug it into Eclipse, and it's much I can rebalance an account in Eclipse based on a modeled account in 5 minutes. So technology has become a game changer, and a more makes us much more efficient and allows us to do really kind of the softer things that our clients need. So we're still managing assets, but we're able to add in kind of alternative investments. Those can be captured on Orion. Our clients have access to a portal. They can load their assets from us as well as other places. I think that's a bit of a game changer also. And then, financial planning and, insurance advisory, I think, are key components. I saw an article the other day that 70% of Americans don't have a financial plan. That means there's a lot of opportunity for us still.
There really is. Now, you also mentioned when you talked about FinTech, you talked about a system called Hubspot, and we're Hubspot users, and I know how we've used it. How have you leveraged that in a new way that's different than the wirehouses and a lot of our industry?
Well, that we're allowed to use it and they're not. So that's a starting spot. But listen, we we are willing to take chances and not chances. We're willing to try things when it comes to marketing. And some things work, some things don't. So we're very active in. Prior to COVID, we started doing webinars, and we started doing a lot of internet marketing, Twitter, Facebook, LinkedIn. You come to our website, and fortunately for us, we can follow you all over the internet, with the cookies that we use. And Telemus is going to show up on your web, wherever you're browsing. We're going to show up for a while unless you clear out things.
Right.
But HubSpot has given us an opportunity to create. We have a very robust email list. We send out a weekly kind of tongue-in-cheek type of email at the beginning of every week with attached articles. So HubSpot's allowed us to kind of curate that. If people unsubscribe, they get unsubscribed. But we have a clean 10,000 people on that list, and they get information from us on a pretty regular basis. And we have a cadence in terms of weekly, monthly, bi-weekly, quarterly type of emails that we can be much more efficient using HubSpot to get that out to our clients, prospective clients, as well as friends of Telemus.
Nice. So what system do you use for planning?
We have a chief wealth officer, which I think is somewhat unique. Andy Bass, who's been with us actually since we started the firm. So Andy is our financial planner, especially for our more complicated situations. And so we use Money Guide Pro, we use eMoney, we use Andy. And it's, between those three things, we can, we're managing money for billionaire families and, families with, a lot less net worth, and doing the efficient job to kind of help them figure out the path to whatever that path is, to retirement, through retirement, into next generations.
Nice.
And Money Guide Pro and eMoney, and Money Guide Pro does tie into Orion Advisors. So when a client is technically proficient to sign in, their Money Guide Pro financial plan is in the portal and gets updated with current values of their accounts on a daily basis if they really want to.
And they can enter through Orion Planning and feed that information into the other system, right?
Yeah, Money Guide Pro feeds into Orion. When a client goes into the portal, that Money Guide Pro plan shows up. They can't change things, but at least they can, take a look at their plan on a regular basis.
But Money Guide Pro has the play zone, so you could actually do that as well if they
We
want.
don't want to give them the keys to the kingdom, so we keep it at the house.
Okay, great. Okay, good. Now we did talk about you're in the suburban Detroit, and everyone's aware of how the metropolitan area has changed so dramatically with bad management, the auto industry just downsizing, and on and on and on. And so Detroit bottomed around year 2000, and it's starting to grow. Now, did that affect your business as you were growing at all? It didn't sound like it did, but.
No, listen, the suburbs of Detroit, there's still money in Detroit. There is a great entrepreneurial class. There are several people and clients of mine that are entrepreneurs that have started businesses, that had liquidity events, et cetera, et cetera. That's always been here, and there's always been old money. Detroit was a wealthy community. The auto industry declined, but there's still wealth here. And we have always found opportunities and clients with needs, professionals, business owners, et cetera, that have needed our services. And over the last couple of years, the wealth has increased, across the Detroit area. Dan Gilbert moving into Detroit, the Illich family moving into Detroit, have really kind of jump-started kind of that entrepreneurial spirit in the city of Detroit. And it started to flow out from there.
So now with Detroit actually growing, it didn't affect you as you were building the business. But now as you're growing the business again from this point on, could the growth of Detroit and the recovery of Detroit be a help to your firm?
I think so. Yeah, there's more money in motion. We've always noticed over the years that, given inertia, people are not ready to switch advisors that they've had. But when they have a liquidity event, a business sale, they inherit money. When there's money in motion, we see that individuals tend to want to reevaluate their entire team. And now that there's more money in motion and more opportunities, we're seeing, we're getting more turns at the plate and that kind of stuff, both here and same thing in Ann Arbor. Ann Arbor's got a very entrepreneurial class. When Pfizer left Ann Arbor, the University of Michigan took over their headquarters and turned it into an incubator. And you're seeing a lot of biotech and pharmaceutical tech kind of grow up, as well as several software firms kind of grew up and sold in Ann Arbor, and kind of they spawned several other firms. So we're seeing a lot of opportunities in Ann Arbor for the same reason, money in motion.
It's a vibrant community there in Ann Arbor for sure.
Yes.
An anchor for the Detroit area, and not going the other way.
That being said, Ann Arbor is 45, from door to door, from my office here to my office in Ann Arbor is 35 minutes. Ann Arbor is a different community. If you don't have boots on the ground, they don't really want to talk to you, which is fine. We just have to manage to that.
You have to be there.
Yeah, exactly.
You mentioned family office services too. So what kinds of family office services that differentiate your firm do you offer?
So, kind of the history of that was my largest client, came to me about 3-4 years ago, pre-COVID, and said, the woman who's running our family office, is retiring. She's done. How can you help us? And we had kind of kicked around the idea of doing that for several years. And we had a relationship with a woman who was a CPA and really didn't want to be a CPA anymore. And we said, here's a blank screen, let's figure it out. They're your first client. Let's go. So we're now up to 10 clients. And it's really, it's a multi-client family office. We use technology to really help us, but, we're managing bills, we're managing employees, background checks, reconciling, bank statements, credit card statements. Some of our clients have come to us, they're deal junkies, and they basically are they have so many deals, it's unwieldy. We're keeping track of it. We've created, an online presence for them where all their assets are, their anticipated tax needs, their anticipated cash calls. We're gathering all the K-1s for them. We're flowing them through to the CPA. We're coordinating with tax attorneys and CPAs, and really becoming kind of that one point for everything in that family, so that they can enjoy their wealth and not have to worry about the day-to-day management of it.
All the specifics of it. Interesting.
Yeah.
Great. So Telemus is, in a sense, an outsourced family office.
Yeah.
Right?
Yeah. And we charge based on complexity and time. So it's a 1-year contract. We charge quarterly at the end of every year, depending on, what's happening. Either, we'll charge more, we'll charge less based on complexity.
So do you also charge management fees in addition to advisory fees that help with the wealth? Okay.
Yeah. So, we're, the bulk of our revenue comes from assets. We charge based on the assets under management. But, we have a division that does insurance. So, we share in the insurance revenue. The commissions come out of insurance. We also have corporate executive services. So kind of like the ACO model, where we go into a business, they pay us a flat fee to kind of be the wealth advisor for their, senior executives or C-suite. We're doing tax planning, estate planning, preparing taxes, as well as advising on benefits and insurance.
Nice. And then if they end up being clients, then obviously there's revenue there.
Exactly.
And their investments as well. But all the planning and stuff is a lot of work. And so the company does that as a benefit.
Exactly. Yeah, exactly. So, some companies do it as a benefit. We were hired by a healthcare chain, and that, we are a preferred provider. We're charging a fee, but the individuals are paying us that fee, not the healthcare firm. But, it's kind of, for them, it's crawl, walk, run. Eventually they will probably pay us, but they want to see how we do. But at the end of the day, our thought has always been, there's a lot of opportunity for corporate executives because a lot of their net worth is tied up in the business, benefits and ownership. And if they were to go to a brokerage firm of one sort or another with $500,000, in assets to manage, but, couple, $10 million of net worth in corporate stock, they're not going to get the best team available. By charging a flat fee and doing those kind of things, we're willing to, kind of work with those clients, and play the long game. Eventually they'll retire, eventually they'll leave, and there'll be opportunities for us on the back end because we've done everything they need to get done prior to that.
And how many companies do you work with now that offer in that way where you charge a fee for corporate executive for a suite of?
Probably 4 or 5 now.
That's nice.
Yeah,
Nice.
we're just getting up and running, but we see a lot of opportunities, and we've actually talked to a couple other RIAs that see the benefit of it, and we're trying to figure out revenue share opportunities with them so they don't have to reinvent the wheel.
Nice. I like they'll outsource it to you.
Yeah.
Great. So, okay, so we talked about growth in Detroit. Where else do you think there's growth opportunities? There seems to be them everywhere, frankly, but what are the niches that you see that Telemus can grow in?
We've grown from a money manager to really a wealth manager. And I think Detroit has still got a room to grow. We're just starting to grow in Chicago. I mean, our goal is to stick in the Midwest and really grow in the Midwest. So it's really Ann Arbor. I'd love to be, have some opportunities to grow in Western Michigan. There's a lot of money and a lot of opportunity in Western Michigan. And really just kind of, I kind of look at it kind of the I-94 corridor from Detroit down to Chicago. There's a lot of opportunity. And for the near term, that's our game plan, is just to kind of stick in this area. We're looking to add tax services. So we're partnering with a CPA firm to start preparing taxes for our clients. And really that's kind of the last piece of the puzzle for us. And really just kind of telling our story to as many people as possible and growing from there, and also recruiting from there. Because I think we tell a good story. And someone asked me the other day, a headhunter we hired the other day, he's like, what would you tell an advisor walking out of a Merrill Lynch or a UBS in the world who's looking to go independent? And my answer to him is, we've been doing this for 16, 17 years. We've probably made every mistake in the book. So learn from our mistakes. Why kill yourself when we've already made those mistakes and we can help you anticipate them?
Right. You hit the ground running.
Yeah.
Excellent. Well, it sounds like you have a great practice. How many partners do you have?
There's 4 partners and 46, 47 employees.
Wow. Okay, great. Great. And how do those employees get distributed into administration, planning, finance?
I think we have 14 advisors. We have an investment team. Matt Demetrician out of our Chicago office runs an investment team. And there's I think there's 6 people on that team. So we manage our own munis. We have a muni bond trader who does all of our own muni buying. We have a taxable debt team out of Ann Arbor that run all of it's a core plus model that's 50% double B bonds, 50% investment grade bonds. And they've got an institutional book of business as well as individual. And then all of our equity and alternatives are run out of Chicago. And I work on the alternative investment team.
Excellent. Excellent. Well, that sounds like a great system. So, we're having a nice conversation here and it's like we're sitting in the living room, but there are literally hundreds and perhaps over a period of time, thousands of advisors that are going to see this interview, Bob. So considering the fact that you have a platform to our industry and you're talking to our brethren, people who do the same thing that we do every day.
Right.
Is there any message you'd like to send that group about your experience in your career, what you see going forward, and ways for them to be the best they can be in the industry?
I've always, 2 things that I think are strong suits of me, and I try to convey to my staff and even my kids is, do the right thing, be politely persistent, and I preach that to my staff. There's nothing wrong with being persistent, but be polite about it, and connect. I'm a big believer of making connections and connecting people, and you never know where the next opportunity is going to come from or the next great idea is going to come from, but by connecting people I think karma is a wonderful thing, and by helping other people, they're going to come back and help you too.
Right.
And I think that's probably a much easier way to go through life than the alternative. Let's say that. I don't want to swear or anything like that.
Sure. And then do you see any trends in the industry that you would want to identify and share with your colleagues as well?
Yeah, I think the biggest trend for us is really kind of, we're getting more and more calls for, less volatile investments. How do I avoid the volatility in terms of the investment side of things? So I think we're starting to put a little bit more of an emphasis on finding, alternative investments, non-correlated assets, to add to our clients' portfolios. And I think, doing it right, finding good real estate, finding good corporate credit, private equity, venture capital, hedge funds. I think those are all, coming into our space at a more reasonable price, at a more reasonable dollar amount. And I think we're just at, first or second inning of that coming into our industry. So Case and iCapital, we're talking to a couple other firms that are kind of just starting to launch that I think will have great technology as part of that alternative investment experience. I think I think that's an important trend coming in the industry. And I think a larger breadth of services, competing on the best mutual fund or the best large cap manager, I think is kind of not a smart way to run your business going forward. I think you got to be able to do the financial planning and talk to them about insurance. Don't sell them insurance, but advise on insurance. We've always noticed that people, I'm dealing with a client right now, maybe a net worth of $10 million. He's got $18 million in term insurance and he's overpaying for all of it. And so he's been sold insurance. Wasn't part of a financial plan, wasn't advised. He was sold insurance. And so I think, being able to be a trusted advisor on all those levels, financial planning, insurance, estate planning, I think are very important ways to grow your business and become a more vital part of your client's life and be attached to them so that if you have an equity manager that fails, you're connected to them in so many other ways that they're really not going to, they're not going to leave because you have so much institutional knowledge of their needs and their goals.
Yes. So it's not about one manager or something like that. It's the relationship.
Exactly. Yeah.
Yeah.
And listen, I avoid it. I have clients who come to me or people who come to me and say, show me an idea. And it's like, no, that's not how I work. Trying to sell an idea and then convert them into a client has never worked and it will never work. So, please give up on that if you're trying to grow business that way.
Yes. Yes. A more holistic approach.
Yeah. And those are the best clients. They stick around. I used to say when any client looks at, when I show a client, here's how we're going to invest your money. And they start looking at like a Chinese menu and they're like, I want this, I don't want that. It's not going to be a good situation. Right.
Exactly. Nice. Well, great. Well, this has been a great visit. You got a great business and really, we appreciate your leadership in the industry. And we'll check in with you again later on at some point in the future. But we appreciate your sharing how you run things, how things are moving and shaking in suburban Detroit. And thanks so much for being with us today on the Financial Advisor Workshop. Thanks, Bob.
Brian, thank you for having me. I appreciate it. This has been great.
And we'll be back with another fabulous interview with another one of our colleagues here very shortly. So thanks again, everybody else, for being with us today on the 4-Star Wealth Financial Advisors Workshop. Thank you.